This is a follow-up on the video I made last week, Don't You Dare Buy Silver Now, which looked at data we've collected in our own research showing demand for physical bullion silver and gold coins in the US market. The world has changed rapidly since then, so it's interesting to see what other bullion buyers are doing. We showed no real flight to safety in gold, as has been reported or expected by many. Other than a blip after the crisis in the Middle East began on October 7th, the trend seemed to be downward. Has that trend continued? In this update, we'll find out. Let's get into it. To start off, let's review this chart showing gold bullion sales transactions going back to August 20th. From there, we see a fall off in sales at the end of August, and then a pickup as premiums drop around mid-September, and finally a surge in demand as the gold price plunged in late September, which had already started to roll over before the October 7th crisis in the Middle East began. Okay, so that catches us up to where we were before. Now let's focus on the recent action seen since then. We see a huge drop in demand on October 10th, and then continued weakness each day thereafter. Do you see a flight to safety in gold there? Because I don't. A flight to safety should be a spike, not a plunge. What this looks like to me, and this is just my own interpretation, but it looks like capital preservation. Stacking gold is great for long-term wealth preservation, but it doesn't pay your bills. You need fiat for that. With all this crazy stuff going on now, it sure seems like a bumpy ride going forward. You could also look at this and say that the recent drop in gold prices brought all the buyers in, and now that gold prices are edging higher, they've pulled back. That's also valid. What I don't believe is happening in gold is that buyers are tapped out. I get it that this persistent years-long inflation is starting to bite. People are hurting, and I would think that the silver market is much more affected by that. Look, if you're buying 1-ounce gold coins at $2,000 a pop, you've got some money. Many people buy silver because the price point is so much lower if you want to stack regularly. That's not everyone. Some can afford both, but they're stacking silver now because they like the fundamentals. The Fed has stated that the consumer is still strong. While some folks are starting to struggle, the consumer is still resilient. Personally, I think they're just running up the credit card to keep their lifestyle going. Look at today's headline. Retail sales rose 0.7% in September, much stronger than estimate. The estimate was 0.3%. After this solid economic report, bond yields rose. The 10-year is currently up 111 basis points. That means there aren't enough buyers to prop up the bond market, so yields have to go higher. Look there, it just jumped to 116 basis points. By higher, we mean they haven't been this high since 2007. Like gold, no flight to safety in the US dollar. All this reinforces the case for the Federal Reserve keeping interest rates higher for longer. And you know what that means for gold prices. The Fed is going to keep a lid on it. I've said it before that the Fed is in the driver's seat. Not even war in the Middle East with the prospect of $150 oil can significantly move the needle on gold prices. If it starts to sink in what's going on, then maybe. Have you watched CNBC lately? I've never seen such scared faces with people using words like the end. Now, let's go over to the futures market. And behold, a huge surge in volume this last Friday. But it's just a one-day event. Monday's volume was back to normal. One day does not a trend make. I think what we have here in the paper market is a rush into gold before the weekend. Because what else are you going to do with your capital when the Middle East is on the verge of the abyss? That's the United Nations words, not mine. Things could turn on a dime in the days ahead, so I'm not placing my bets just yet. Long term, I believe gold is a solid investment that will likely perform very well going forward. It's just in the short term that I'm not so sure, which is why I repeat the words to myself, don't you dare buy gold now. There could be some nice sales coming. Alright, enough doom and gloom. Let's head over to the silver chart for a pick-me-up. And silver looks even worse than gold. My oh my, that's ugly. Okay, here's where we are since our last report. Silver has very sharply pulled back and now sits at mid-August levels. What we're looking at is an aggregate sales of American Silver Eagles maples, krugerrands, and kangaroos. Silver prices are off their lows of $21 an ounce at just under $23 right now. So if you're looking for excuses, let's just say that buyers loaded up on silver when it was low and the world is not about to end. And that wraps up today's video. If you found it informative, be sure to smash that like button to help others discover it as well. To stay updated with our latest content, don't forget to subscribe to the channel and enable notifications by tapping the bell icon. For those already safeguarding against uncertainties by investing in precious metals like silver and gold, ensure you're making your purchases at the best prices. Visit citystacker.com where you'll find the best deals on precious metals bullion from top online dealers. The link can be found in the description for your convenience. As always, thanks for watching, and we'll see you next time.